big shout out to everyone who has subscribed to the channel. We're about to hit that 10k subscriber mark. If you're new here, don't forget to hit that subscribe button and turn on the notification bell icon to be the first to watch when we upload any new content. Don't forget to leave a like for the YouTube algorithm. Also leave a comment. As soon as we hit that 10k mark, we are going to start having live trading sessions, so do stay tuned. Hi guys, welcome back. We're back with another video, and in today's video we're going to look at how you can trade flips, or how you can use the break and retest approach when counting your levels and actually looking for setups, right? So when we look at structure, right, usually when we get a zone, or rather a supply area being hit many times, that zone becomes weak, right? So we can say the zone is weakening, right? Or we can call it a weakening base area, in this case a weakening supply, right? So as you can see in this example, this can actually be our peak, right, going into level 1, right? What we can see is we have the supply area being broken, right? That can be your level 1. All right, remember our cycle is W V V M, right? So this can be our peak formation, right, and this can actually be a V, right? But this V, look at what this V does, right? This is just, you know, a retest of this area, right? This is just a retest of this area. Now a lot of things can happen, right? This can happen, right, and price can just push up, right, and then continue going down, right? So we don't want to be, you know, caught up in such trades, right? So in this case, when this happens, right, you can relax, right? And the moment we get a break of structure, right, remember, we would love to identify some imbalance at this zone, right? We would love to identify some imbalance and then get a break of structure, BOS, at this area, right? Get a break of structure leading into level 2, right? Now what we want to see after this is we want to see the retracement, right, or the approach back to the demand area, right? Remember, this is supply and this now becomes your demand, right? But as price gets here, we do not just execute or go long, right? Because a lot of manipulations can take place at this area, right? Now for you to always be on the safe side, what you need to do is you need to wait for a change of character, because in this case, as we are retracing, right, returning to the order block, right, this is a downtrend and this is a lower high, right? This is a lower high. So as you can see, as we get this lower low in to the demand area, this being the first time price comes back to an order block, right, what we would love to see is a change of character. In this case, we now have a higher high, all right? And then what we love to do is wait for another retrace back to this demand area, and we can, you know, look for long trades, right? You can look for long positions with a stop loss just below that area, right? Always make sure your minimum risk to reward ratio is at least 1:4 or 1:5, right? That's the best, right? Because in the long run, you will be profitable. So here's an example that I actually identified on NAS 100, right? So in this case, as you can see, we had a peak formation. Remember, the most important thing is to always identify your peak. So we had a half a Batman type of peak formation, as you can see, half a bat, right? Price then drops, you know, giving you level 1, level 2, last level, right? So clean day of drop for that day, right? So on that day, as you can see, what we have is we're at a 5200 crossover. We anticipate a safety after that, and this actually happened. If we go to the H1, as you can see, this was a flip, right? This was actually a flip area, as you can see, right? This was demand, it was broken, right? Then price then gave us a break of structure, right? After price gave us the break of structure, price then went back up, right? We're anticipating such. Now, instead of just going short, right, when you see a reaction at the 200 EMA, right, you can actually wait for this, wait for a change of character first. So as you can see, price is moving up, right? You had opportunities. I mean, on that same day, right, we had a nice break of structure or a change of character, as you can see, and then price then gave us a nice move back, right, to that high of the day, right? So these are the type of trades where you can actually wait for, right? right? You actually wait for these types of trades because you know that when they play out, they pay, right? You get to minimize your risk. You get to minimize your risk and maximize your gains. All right, you get to minimize your you minimize your risk and maximize your gains, right? So this needs you to be very selective, guys. You need to be very selective when doing this. All right, you need to be very selective in doing this, right? You can't just do it everywhere. You need to actually apply it to your setups. All right, remember, you can't just trade anything, but you actually need setups, right? So yes, guys, hope you learned something from that. Go and back test this, right, and understand this, right, because this will help you identify your peak formations, right? This will help you trade in line with the dealer. This will help you trade away from the peak. All right, guys, if you learned something from this video, do leave a comment, leave a like for the YouTube algorithm, and also check out our free Telegram channel. Find the link in the description below. Have you been struggling to make consistent profits in the forex market or not had enough time to analyze the market and trade? At MMK, we have experienced and qualified traders who analyze the markets and send signals directly to your phone. We are highly selective traders and we provide 5 to 10 signals weekly and a minimum pip count of 1,000 pips monthly. Join the winning team and stop donating your money to brokers.